Invoice financing for small business owners, how it works and why you should be interested in it. Call 888-653-0124 today or click the link in the description to learn more. When you need cash quickly, invoice financing may be just what you need. This is especially true if you're running a small business and need some quick capital to keep things going. There's nothing worse than being short on cash when you need it. Whether you're a new entrepreneur who needs to build up their business before they make money, or you've been around a while and need some extra funds to cover unexpected expenses, invoice financing could be exactly what you need. In this article, we'll discuss why you should consider invoice financing, how it works, and how it can help you grow your business. How does invoice factoring work? The process involves selling the company's receivables, future income, to a third party called an invoice financier. After that, the financier will collect all outstanding invoices from customers and pay them off using the money it receives from the business. The rest of the funds stay with the company. This means that if a customer has not paid his bill by the due date, the company must still write off the debt as uncollectible. If the customer pays before the due date, then he'll receive a discount on his next bill. Unpaid invoices are sold at discounted rates because they carry a risk to the financier. However, this risk is offset because these accounts have already been turned into cash. So the financier is buying the right to take out more money as a loan. The company gets its own money now, while the financier collects the money later. That way, there is no delay in receiving funding. How does invoice financing differ from invoice factoring? Factoring is a process where a company sells its invoices to a third party at a discount. The third party then collects the money from the customer and pays the business the rest after deducting their fee. In contrast, invoice finance is a way for businesses to borrow money against their future receivables. Invoice factoring has become increasingly popular among small businesses because it allows them to access cash flow earlier than they would if they had to wait for customers to pay them. It's also a great option for companies who don't want to take out loans but still need to raise capital. The approval process for invoice financing usually takes only a few days. Once approved, the company can get instant access to the cash needed without having to go through the lengthy application process required for other types of loans. Why is invoice finance important to your business? If you run a small business, invoice financing is one of the most important tools available to you. Here are 3 reasons. 1. Access to cash flow. One of the biggest benefits of invoice financing is that it provides immediate access to cash. When you apply for a bank loan, you typically have to wait weeks or months before you even hear back. By comparison, you can start getting funded within days or hours. 2. No collateral required. Another benefit of invoice financing is that you do not need collateral to qualify. Most banks require collateral like inventory, equipment, real estate, etc., which can cost thousands of dollars. But with invoice financing, your only requirement is past due invoices. 3. Lower rates than bank loans. Another advantage of invoice financing over bank loans is that you can get better terms. Banks charge high interest rates when you use up your credit limit. Invoice financiers offer lower rates because they make money off the spread between what you owe versus what you're borrowing. Business line of credit versus invoice financing. The best way to describe invoice financing is it's like a line of credit, but instead of borrowing money from a bank, you borrow against your future sales. It's a great option for small business owners because they don't have to wait for months before receiving payment. Instead, they receive upfront funding, which they can then apply towards their next bill. Invoice factoring is another form of working capital finance. Factoring companies will typically lend you 80%, 90% of the value of your invoices, based on your past performance. Once you get paid by customers, the company will advance you the rest of what you need. This means you're not waiting around for customers to pay you back, you're already earning cash flow. Cash flow issues are often cited as one of the primary causes for small businesses going under. If you've been struggling with slow revenue growth, low cash reserves, or no cash in the bank, invoice financing could be exactly what you need to turn things around. Small business invoice factoring. The best way to find out if this is right for your business is to contact a few different providers and see what they offer. If you're looking for a provider that offers flexible terms and competitive rates, then look at our list of top 10 factoring companies. A factor is essentially a loan against your future revenue streams. It allows you to access cash now by selling your invoices to a third party, usually a bank or invoice finance company. Once the money has been secured, it will be paid back into your business account within 30 days. Short-term borrowing is ideal for companies that have little time to spare. They can afford to take on additional debt without worrying too much about how it will affect their balance sheet. However, there are some downsides to using this method. The most obvious is that you won't be able to grow your business. In order to keep growing, you'll need to expand your customer base and increase your sales. This means more invoices coming in. With your current setup, you may not handle any more work. That's why it makes sense to save up for those inevitable rainy day expenses. You also risk losing control over your finances. Many people think that once they sell their invoices to a factor, they lose all say over them. While this isn't entirely accurate, you do give up a little bit of power. Your payments will be made directly to the factor, so you won't always know exactly where your money is going. Describe how invoice financing works for a business. Call 888-653-0124 today or click the link in the description to learn more.